Greetings, guys. How are you doing today? It's a pleasure having you here. Welcome back to the CSA Forex channel. And today we're going to be looking at the precious metal gold. Yes, we're going to be talking about gold from the higher time frame all the way down to about 30 minutes time frame. So we're going to be doing a multi-time frame analysis approach. But before we jump into that, a quick disclaimer for you. Kindly note that trading the financial market carries a high level of risk, and it's advisable that you trade with money that you can afford to part with, and also ensure that you use proper risk management, and of course, always allow your stop loss to be in place. Also note that the information that we are sharing is strictly for educational purposes. With that said, looking at the gold chart that we have in front of us from the monthly time frame, before we cross over to the weekly, to the daily, and so on, we need to always ensure that we check the calendar. It's always good to check the calendar, and our go-to calendar is the Forex Factory, right? So you can check the Forex Factory calendar, and then we normally look at the calendar based on the week, and then we look at strictly the high impact news, the red, because these are the kind of news that tend to move the market. So as we have already done that by filter over here, we came to the filter here, and we've been able to filter everything to only the high impact news. So Monday, there's nothing, no news whatsoever. Tuesday, we have a bunch of news coming out. But if you notice, there is none for the US dollar, and we're talking about gold. So we tend to pay more attention to the DXY, to the US dollar, right, based on the directional bias for this. So if the directional bias for the US dollar probably is going down, then you should expect the gold to go up. Even though this doesn't happen all the time, but up to a high degree, this tends to be the case. So you can use this as a form of gauge, as a form of correlation for your trading. So no news whatsoever on the US dollar on Tuesday until Wednesday, where we have the consumer confidence, and Thursday we have news for the dollar as well, and then also on Friday. Now, one thing you should also note that this is more or less the last week of trading. Well, I won't say the last week of trading, I mean the last week of true liquidity, because the liquidity is going to start to dry up, especially as we approach the Christmas period. And even after Christmas period, it is still holiday, so you will not have true liquidity. And that's why I said more or less this is going to be the last week of trading, right? So make the best use of it. Try as much as possible not to end the week, not to end the month, not to end the year on a negative, right? So you don't have any directional bias of the market. The best thing for you to do is to be on the sidelines. So this here is the news that we have coming out for this week. And then now we're going to now go over to the chat and talk about what we have for you, right? From the higher time frame perspective, from monthly, if you look very well, we've had about these areas here that have acted as resistance, or you could call them supply zones. And then it has been respecting this area as it has not been able to punch through. We had a fake out over here based on this week that we can see. We had a fake out past this area here of key resistance on the monthly, but then what happened? The price came back down and now is beginning to look similar to a pin bar. Well, in a way, some could say that this is more like a spinning top, understood, but at the same time, let's see how the market will close for this month. That would help us to, directional bias for January, February 2024. Meaning that is the market going to do what? Is it going to drop back down, back to this key area over here that we have as the flip zone? Or is it going to break out and then use this place as a stepping stone to push higher next year? Next year definitely is going to be interesting, to say the least. So this is the market from the monthly time frame. In conclusion, where it is now is at an area of resistance, and the people you are supposed to find more at the area of resistance are the sellers. So the sellers should take over. So if you're looking for anything to do in the market, you should be from the monthly time frame looking more into selling. So from this monthly time frame, we'll now cross over to the weekly, and then from the weekly, we conduct our analysis. Now, one thing you also need to understand that by the time you start to drop down in time frames, things start to get a bit much clearer and clearer and clearer. You can see the area that we talked about earlier, that we said acting as resistance. You can see the fake out over here based on the wick. And then if you know how to combine candles, if you know how to combine the candlestick patterns that you have here, these two candles, this one with the wick that punched through this resistance and the previous one, combining the two of them together is already a 2-week pin bar. So this pin bar is already looking so at this 2-week candle, right? Right? So if you look at what we have over here, naturally, the next thing you should have is the market to drop, at least first of all, to these areas of demand, and then maybe get into this area of about 1590 or 1600 significant area. You can see significant area based on here being support, here being resistance, resistance, which is an area that has acted as flip zone. And by the time you continue to look at the market, you keep on seeing some key areas over here on the chart. This one was never tested as support, right? So moving on, we have this 2-week pin bar, very key, very significant, meaning that for this 2-week pin bar, we're expecting the market to drop down. As we just said that now, you need to always put this chart on your own MC4 or your trading view or whatever. And then after you do that, pay attention to it every now and then. Also, we will be doing an update for you and giving you, what's happening now based on the gold, based on what we talked about before, and so on. So this is what we have over here. You can see more signals telling us time to sell at this area of resistance, right? You can as well say, oh, but Tolu, isn't the trend up? Isn't it supposed to be buyer's world? Yes, you could say that. But at the same time, you still have sellers inside a buyer's dominated chart. Meaning that if you want to buy, you should be looking forward to price getting here. So who is going to bring the price down to this point? It is the sellers that will bring it down here. And then if you don't want to enter as a, fast and aggressive counter trend move, what could you do? You could drop down in time frame some more. Pay attention to this candle that has retraced because it has retraced part of this pin bar. So you can drop down in time frame some more, and that is what we are going to do now. We're going to drop down to the next time frame of daily. Now it gets more and more interesting. Looking at the daily, I'm going to show you guys something. That's why multi-time frame analysis approach is very key. Look at this candle. This was the one on the daily time frame that punched through this area of resistance. We're talking about the area of resistance all the way back. And this candle that punched out, look at what it formed. It formed a bearish engulfing. Meaning that this bearish engulfing is telling you time to sell, and it is a massive bearish engulfing. The price action candlestick pattern traders would already know what I'm talking about. When you talk about this like bearish engulfing, or you talk about the pin bars, hammers, dojis, and so on. So this is a very key one. Now it broke the lows of this bearish engulfing, came down a bit, and then pushed higher. And then you can see we put a fib retracement because it pushed higher to about 50 fib, and then it looks to be going down. I'm showing you all of these things that are happening now because there are opportunities in the market to enter. You could have entered here on the break of this bearish engulfing, but then ideally your stop loss should be above this area, should even be above this candle, but to be a massive, I repeat, a massive stop loss if to be above this one because we are on the daily time frame. So I'm going to do something. We're going to continue to drop down time frames and see that we can find a discounted entry, because that discounted entry was supposed to be at this 50 fib retracement, but then it seems to be going down a bit. But then let's do what? Let's drop down further and see what we can make out of it. You can see those areas of interest here: resistance, support, support, flip zone. Very key, important area that has acted as support and resistance in the past. So this will be a very good area at about the 1800 area for you to take profit if you are short over here. And trust me, let's see how many pips that should give you. That should give you about 2,000 pips thereabout, if not more. But let's just say about 2,000 pips if you can get this move. So if you can get a 2,000 pips move, of course, you know that this move is going to enter into next year, obviously. So if you can get a 2,000 pips move, wouldn't that be a good way to start the new year? Yes, it will. Yes, it will. Speaking of 2000 pips move, last week we were opportune to get a beautiful trade on the gold where we're actually buying, and then we made about 420 pips. We got this area here, as you can see, this area was more or less a support that broke down, but then we're expecting it to push higher. And then this big, massive candle that aided our entry was based on the FOMC from last week. Right? I'm sure some people know the FOMC, and then you know what happened last week. Some of you might have even gotten injured from the news because I was hearing reports here and there. Somebody crashed account, somebody lost heavily, somebody's in major, massive drawdown, and so on. So this was the move that we had, right? And then we were in profit over here, and then we're looking to close our profit here at this flip zone of 420 pips. Don't forget flip zone, support, support, support. Now, let me just do the marking so that you understand better. Support, 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 resistance, 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 and so on. And then what happened over here? From here, the next chart will show us that price did what? That price did something. Price pushed higher. You can see price kept on pushing higher, closer to our 420 pips take profit area. And then before you know it, we're sitting at about 364 pips, right? Close to 400. And then finally, our take profit was hit over here. Now, this was a fantastic trade for us at 420 pips. Just imagine what 420 pips can do for you in a week or maybe even in a month, right? By the time you use a proper lot size volume, right? So now this was a trade that we took, and trust me, you can still take more on gold. Looking at this gold over here from the daily, let's drop to the 4 hours, and then you can see from the 4 hours, this is the area, right, that we're talking about now on the 4 hours, this area over here. So this area over here is looking more like what? Let me just cancel that out. It's looking more like what? It's looking more like, can you see resistance? It didn't quite get here, but then came back to this area to act as resistance again. You might be lucky, might come back here, give you something here, and then drops down. And of course, it might not do that. So if it comes back here, good, you look for entry here and then take it down back to this lows of the fib and see whether you can hold it all the way to that weekly, monthly, daily take profit zones that we just looked at now, which is about 2,000 pips away. That will be a major and a massive one. The highest pips I have made personally was thanks to gold, was years ago. I made about 1,800 pips. So yes, of course, it is very much doable. And I held that trade for about 6 weeks. So you can do it. You are just most likely going to hold the trade for a long period of time. So if it doesn't come back to this area, let's drop down to the hourly, and then boom, you can see what we have here. We have a wedge. This is a wedge pattern over here, and the wedge pattern has been broken out. As the wedge pattern has broken out, look at something again. It immediately came back to this broken trend line and then dropped. Now, let's drop down to 30 minutes because it will be much clearer on the 30 minutes time frame. Don't forget we said the lower the time frame you drop, the more clearer things become. So you can see the word we talked about. You can see this area where it pulled back on this massive candle, broke down, pulled back to this area, and then acted as resistance and dropped. Now, assuming you want to try to jump in on a discounted price, wait for the market to come back to this area, see what you get over here. You get a good entry. This might be the place for price to continue the down move and see whether you can get it to the bottom of this area here, or you could hold it for about 2,000 pips, which will spill into the new year of 2024. But whatever the case is, right from the monthly all the way down to this 30 minutes time frame that we have just analyzed, you'll notice that everything is pointing to down. Everything is more or less for you to enter on a sell position. Now, this is how you're supposed to be conducting your analysis, by the way. You look at the market, you pay attention to the market, You map out your chart based on patterns, because everything is patterns at the end of the day. And then you see where you can jump in on that market. Simple. Now, with that said, we're going to be rounding up this video. And of course, if the video was helpful, give it a thumbs up. If you are new or you are yet to subscribe to the channel, what are you waiting for? Hit the subscribe button now. Share the video with many. Let people take advantage of this. And of course, we have a school. The link will be in the description. We have a CSA Forex school that you can join us for free training. We have a Telegram community. We have a trading membership area that we are going to be launching in January. And you can take advantage of that. We are more or less going to be trading together live. I'm going to be posting my charts live and then showing you where I want to enter, where I want to exit, more or less like signals. And then you can take advantage of that. Now, what better way for you to learn, or rather for you to earn while you learn? So as you are learning, you're placing trades based on what I'm doing, and you're also earning. And this will be a good and a massive booster for you and for every other person. Now, with that said, I want to say thank you. I'm going to round up now. I want to say thank you for joining us. Do the needful. Watch this video a couple of times. Map it out on your chart. Wait for price to either come back to this area. And if this area should fail, you remember on the higher areas, like 4 hours, we had the areas that were eyeing as well for the price to push higher and higher to, right? Maybe push back to this area of 2050, where we would also like to position ourselves here to jump into the market. So the market could as well come back here and then drop down. Now, don't also worry if you have a loss or two. That is the business. There is no strategy that is 100%. As a matter of fact, before you at times or most times have a massive runner, you might have had like a loss or two. Minimize losses, that is. Don't forget, risk management is very key, and you must always ensure that you minimize your losses appropriately while maximizing your profit. So let's see how this market plays out, and of course, we will give you updates as time progresses. Thank you guys. It has indeed been a good one. Enjoy the rest of the day. Trade safely. If I don't get to hear from you, compliments of the season to you and your family. Goodbye for now. Cheers.